Hey guys, it's your girl Folasade, the accountability accountant, guys. Look, guys, I told you, once the IRS released out them 2023 numbers, guys, there's just so much stuff that we supposed to be talking about. So, guys, in this video, we're going to talk about the IRS tax bracket changes. I already did a video about them changing the standard deduction rates, right? So you guys want to check that video out. So let me go ahead and share my screen so I can walk you guys through this, so you can be well aware and be prepared and everything else, guys. So this year, all right? So if you are a single individual and you make $11,000 or less, okay, you have a 10%, your taxable income will be taxed at 10%, okay? If you are married filing jointly and your income is $22,000, because that's how they normally do it. They just double it up, right? It's $22,000. If your income is $22,000 or less, then your tax rate is 10%. Okay, so $11,000 or less for single individuals, your tax rate would be 10%. Okay. If your income is $22,000 or less for married filing jointly, your tax rate would be 10% as well. Okay. So that's pretty important. All right. So now, if you are married filing separately, you would take the single rate. Okay. And let me see what the head of household rate is. Give me 1 second. Okay, I don't see that here for right now. So we're going to retract that and just discuss the married filing joint and the single individuals. So what does that basically mean? All right. So that means that the IRS, remember, and like I said, if you haven't checked out my previous video, I talked about the standard deduction. The standard deduction is the number that every U.S. person that files a tax return, they qualify for. Okay. So once you take that $45,000 of income that we discussed, right? And we take out your standard deduction. Let's go with the single rate of the standard deduction. Let me pull out my calculator, guys. So we got the $45,000 in income, okay? Then we subtract out the $13,850 for the standard deduction. So that leaves you with $31,000 in income, right? So that number that we're discussing right now is what you will be taxed. Okay, that number so we'll take this 31,000 or whatever your remainder is, and then multiply that by your 10% tax bracket. Okay. So let's do this in practical terms. Let's use a real live number. So let's say, for example, your income is only $22,000 and you're filing jointly. So that means your tax rate is that 10%. So we're going to take your 22,000. Okay. And remember, you get the married filing joint standard deduction, which is $27,700. So you're going to take your $22,000 in income. Let me stop sharing so you guys can see me. You're going to take your $22,000 in income, subtract out the $27,700 standard deduction. That gives you a net loss. They give you a loss of your taxable income or your AGI. Well, no, your taxable income. Okay, so that means if you ended up paying any taxes and you only made the $22,000 and you paid some federal taxes, then you ended up paying federal taxes for no reason. That is why I recommend, regardless of what income level you make, you can make $22,000 a year. And normally when I see a person that makes about $22,000 a year, if they married filing joint, or let's say $10,000 per year and they're single, right? They're still paying federal taxes. Some of them end up paying like $800 in federal taxes, $1,000 in federal taxes. Not that much, but they still end up paying federal taxes. Because the standard deduction will subtract out from your income, you guys are overpaying taxes throughout the year. This is why I advise you guys to speak with an accountant And once again, this video is not tax advice. This is just me teaching you guys the tax system. Many of you are paying taxes throughout the year when you really shouldn't. So some of you are maybe struggling to pay household bills when you shouldn't be, because you have an additional $200-300 that you're paying in taxes when you don't have to. So this is why having an accountant is very important in understanding your taxes. So guys, if you have any questions, I know this was a lot, and I was trying to get you guys to understand the tax rate increase, and I really didn't go into all of the other tax rates because it's kind of confusing, and you guys may not want to even know that much anyway. But let me know if you guys want me to go into each different income bracket for based on each tax rate, okay? And then deep dive. Let me know in the comments below. If you're confused about whatever I said in today's video, comment below and let me know what you're confused about. Guys, if you like the video, please like and subscribe. Please like the video and subscribe to our channel. Guys, have an amazing day. Bye-bye. If you like the